Hello traders, Gary Wagner here. It is 11:44 in Honolulu and 5:44 in New York on Tuesday, 5th day of April 2022, and this is the daily report for gold and silver. Gold opened nicely at $1,937.30 and climbed from there to $1,948.90. That was before a Federal Reserve member in a written speech talked about the aggressive nature that they need to apply to their current monetary policy in order to get a handle on inflation. When we look at a 10-minute chart, which we'll put up after the price board, you'll see how quickly the market reacted, going from $1,948.90 down to a low of $1,920.90 and is currently fixed at $1,926.60, a couple dollars below our entry price. That's a net change of $7.40. On closer inspection, when we look at today's decline in gold, which is down 0.38%, and dollar strength, which is 0.50%, we can see that today's sell-off is really the net result of dollar strength. I've just put up the Kitco Gold Index, which is fixing spot gold at $1,922. And when we look at the components, there was slight selling pressure, $1.50, in addition to dollar strength, $9.70, which is why spot gold lost $11.20 on the day. This first chart is a 10-minute candlestick chart, and it clearly indicates the effect of a member of the Federal Reserve today, talking about aggressively changing their monetary policy and the beginning of their asset sheet balance reduction, as she put it, as a rapid pace. You can see that in a period of time of approximately an hour to an hour and a half, we saw gold go from almost $1,950 down to these lows just above $1,920. Prices really stabilized, and as you can see, formed a baseline at approximately $1,926, and that is where current pricing is. Traders, we're looking at a daily candlestick chart of gold futures. I am addressing, first of all, the low that came in below 1900, as well as the highs that came in just above 1960. But for the most part, we have seen gold trade within a very tight and defined range. I'm looking at the recent lows at around 1920, and then the recent highs that have come in have been at approximately 1955, right in that area. I would expect that as long as we can hold $1,920, that we should see a return to rally mode. The pressure right now, obviously, is that the Federal Reserve is attempting to go from behind the curve to get in front of the current level of inflation. That is impossible. It took years to get to where we are now. The prediction of a Q1 2022 at 9.1% takes us to a 43-year high in terms of the levels of inflation. It began years ago, and the additional pressure created by the conflict in Ukraine from Russia has just added fuel to an already widely ignited fire. So I think that we will see some pressure, but this sideways trading right now, I believe, is simply consolidation in the market as traders absorb the news of a Federal Reserve that's going to be much more aggressive and the supply chain bottlenecks that continue to mount due to the geopolitical condition as it stands now. We are looking at a weekly chart of gold. Obviously, the fact that it's Tuesday hasn't given us enough time or data to really see how the week's going to end. What we can say is up till now, the low is well above the previous low that we saw last week. And of course, last week came in with a low at approximately $1,892. While the other fact is we haven't had a higher high. And we are trading very close to Monday's open. Currently, I believe that our best exit strategy would be to look for gold to rise, let's call it 1960, and pull profits at that point if we see any resistance at that particular price point. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.